Euro dollar. So for today, the key levels to watch above and below in the euro come in at 10.60 above and 107.96 below. A break back above 110.60 would suggest that this current correction that we've seen out from the December low at 105.20 will continue potentially up towards the 112.90 area, which is a measured move upside extension. However, at the same time, a bearish outside day formation on Tuesday could open the door for renewed weakness, but we need to see a break back below 107.96, recent lows, that would suggest a more immediate bearish resumption and continuation back down towards a retest of those two December lows at 105.20 and then down towards the 104.60 multi-year low from March. Sterling dollar. So cable continues to adhere to a very well-defined downtrend off the 2015 high at 159.30, making a series of lower tops and lower lows. A fresh lower top is now sought out by recent highs at 152.40, which will be confirmed on a downside extension, opening a fresh downside extension on a breakback below 148.95, which is a recent low. Below 148.95 would then expose a retest of the 2015 low at 145.66 further down. At this point, only back above the previous lower top now at 153.36 would compromise the immediate downtrend in cable. Dollar yen. So dollar yen has seen some gains in recent trades since breaking down below that multi-day range at 122.20. But additional setbacks should not be ruled out since the market broke down below that range support, with good resistance coming in the form of that previous support, now turned resistance in the 122.20 area. At this point, only back above 123.76 would compromise the current downside pressure and open the door for a potential retest of the 2015 peak at 125.85. Again, while the market holds below 122.20 on a close basis, this leaves open the possibility for deeper setbacks below the current weekly low at 120.34 and down towards the 119 area. Euro Swiss. So not much going on with Euro Swiss as the market continues to trade within a tight consolidation over the past several months. Overall, though, with the market recovering out from those record lows earlier this year, there is risk for additional upside beyond the recent 110.50 peak from September, which would open the next upside extension towards the 115 area over the coming weeks. At this point, any setbacks should continue to be very well supported above 107.14, with only a break back above this level to compromise the integrity of the current bullish recovery. Aussie dollar. So Aussie continues to be very well capped on rallies ahead of 74, with the market confined to a broader downtrend. At this point, only back above 73.85 would compromise or threaten the current downtrend, while deeper setbacks are now favored back towards and eventually below the multi-year low from August, just ahead of 69. Dollar CAD. So dollar CAD has traded up to fresh 11-year highs, with the market stalling just shy of 138 thus far, and deeper fresh gains could now be seen towards the 140 psychological barrier in the sessions ahead. At the same time, daily studies are looking a little bit stretched, so there is risk for a bit of a short-term pullback before the market sees any continuation in this recovery rally up towards, or this strong uptrend towards 140. Again, though, the market is confined to a broader uptrend and really only back above lows that we saw all the way back going to the month of October at 28.32 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi, just like Aussie, is confined to a consolidation over the past several months, but the market again is confined also to a broader downtrend, and any rally should be very well capped. Medium-term lower top is now sought out in the 69 area, which will be confirmed if the market can start to break back down below that August extreme multi-year low in the 62 area. At this point, the key level to watch over the coming sessions to the downside is the 65.71 support going back to the 9th of December, while again to the top side, only back above 69 would threaten the current downtrend in Kiwi. SPX 500. So the S&P 500 failed to establish a close below 2003, that low that we had seen back on the 16th of November, and this keeps the immediate pressure a little bit on the top side while the market is able to hold above that level. Ultimately, though, there have been signs of the market wanting to break down and signs of exhaustion following the breakdown from the 2117 high that we'd seen back in early November, just shy of that May record high at 2137. So overall, there are signs of topping, but the market will need need to establish below 2003 on a close basis to confirm and open the door for additional acceleration back down towards that 1870 medium-term support in the form of the low from the 29th of September. Gold. So gold is consolidating just off recent multi-year lows at 1046, though the market is showing potential signs of wanting to base, but we will need to see a break back above 1100 to confirm and accelerate gains. Inability to establish above 1100 could keep the pressure on the downside, while a break back below 1046 would expose critical psychological barriers further down at 1000.